150 billion in 3 days. That's how much the world's largest cryptocurrency markets lost in the past week due to the scam called FTX that backed famous token FTT created by Sam Bankman-Fried. So what went wrong? And how can a company that managed to get some of the biggest celebrities, biggest athletes in the world with large audiences to promote the company by such a scam? Or were they a part of it? And how did a token that raised $7 billion in less than 3 years go bankrupt in a matter of a week? Let's find out. Once praised as the almighty savior of crypto, Sam Bankman-Fried started one of the biggest crypto markets in the world, but how did he manage to turn it upside down in a matter of 7 days? Often praised as the almighty savior of cryptocurrency, Sam Bankman-Fried manipulated famous athletes and celebrities like Tom Brady, Shaquille O'Neal, Steph Curry, and many more to promote the world's biggest crypto scam in history. But how did he do it? Let's find out in this video. Before we jump into it, make sure to hit that subscribe button, hit that like button so we can push this video out to as many people as possible. By now, many of you have probably heard FTX crypto scam owing more than 100,000 people billions and billions of dollars all over the news, all over YouTube. You've probably seen it many times already. But how did it get to this point? In order to figure that out, we have to take a look at how traditional banks work and how they invest their money. When it comes to a traditional bank like Chase Bank, TD Bank, when a customer makes a deposit, when you actually put that cash into an ATM or give it to the teller, they are now investing that money. So that money goes into a system, and ultimately that bank invests that money, whether it's into real estate, whether it's in stocks or bonds, and probably many more things, to get a return on their money so that they can ultimately make a profit off of our money that we invest into them. Now, in the same way, Bankman-Fried, the founder of FTX and the famous FTT coin that traded on that marketplace, took customers' cash, took the hard-earned money of people just like us, and invested it into other assets. What they fail to acknowledge is having enough collateral to support whatever withdrawals that customers are going to make. For example, let's say you go to take out money from that crypto market. That money, it needs to be there, right? Now, FTX wasn't so lucky. Just like a traditional bank, they were attempting to trade that money onto a separate entity that was owned by FTT. They were trading that money under a separate entity called Alimony that was a hedge fund that was started by Sam Bankman-Fried and backed by the famous FTT coin that was also started by Sam, and it was traded on his own marketplace called FTX. Now, after hearing all that, it's probably obvious why they filed a 23-page bankruptcy to get themselves potentially out of this mess, leaving hundreds of thousands of people, just like me and you, wondering how are they ever going to get this money back. And the craziest part about all of this is how they manipulated big-time celebrities and athletes like Tom Brady, Steph Curry, Shaquille O'Neal, and many more to invest into this company. And when I say invest, I mean invest their time and advertise this. And when I say invest, I mean advertise and promote this brand as part of a $20 million ad campaign. And at the end of the day, that's really what drove this coin to raise $7 billion. Bottom line is, always be aware of who you're taking investment advice from, even if it's a famous influencer, even if it's a famous athlete, heck, even if it's the money man himself, Kevin O'Leary, because at the end of the day, he also promoted this product. Make sure you subscribe for more videos just like this. Thanks for watching.